Okay, so under this video is going to do perpetual inventory, so better get it to the right sheet. So basically I have the same information, so again I need you to change this one to, need you to change this number to 510 instead of the 560, or just print out this page. So do a screenshot of it. So again, I just left this from the last problem, mainly because you're going to have the same entries for accounts receivable sales. I don't care which method I use. I sold them for $38 under each, so I have $11,400, $22,420. And so I will have the accounts receivable sales, and I will have the purchases of $15,012. So debit inventory, accounts payable. Okay, so now I'm going to do perpetual. Perpetual is almost exactly the same as periodic. It just takes a little longer because you keep track of the sales as you go along. You perpetually keep track of the sales. So what I usually do under perpetual is have a few columns. So over here, I'm going to have my inventory balance column. So it'll have units, cost, and total cost. I'll have my cost of goods sold, and then I'll have my ending inventory. You might have a different method of doing it. That's just simply how I do it. So I just do it as I go along. So I kind of want you to ignore this right here. Maybe I'll highlight what I want you to watch. So the first thing I do is I have 400 at 20 at 8,000. So I write that down there. Then I figure out what did I do next. So I've got beginning inventory, then I have the 12th, and I have the 10th. So on the 10th becomes before the 12th, so I do the 10th next. I sold 300 at 38, but the 38 is the selling price. I need to know what they cost. So remember, I've already recorded my accounts receivable sales at the 11,400. I'm worried about what is the cost of goods sold inventory entry. So I have first in, first out. I only have one level right here. 400 at 20 is the only thing I'm looking at because it's the only inventory I have. So I sold 300 of the 400, leaving 100. So 400 minus sold is ending inventory. So notice the 6,000 and the 2,000 equals the 8,000. Inventory is either sold or still here. This amount is sold. This much is still here. Okay. Next date is the 20th or the 12th. The 12th comes next, and I purchased 600 at 25. So now I have two layers. This $100 there, I simply take over here, and again, you can probably put it over there. It doesn't matter how you do it. And now I have two layers, 100 at $20 each, and I have 600 at $25 each. So now I go to the 20th, and I sold 590. First in, first out. I sold the $20 ones first, then the 25. Again, I usually put 590 and start with, so I don't mess up on my units. And I work down from the top, first in. The first in are the $20 ones, so I sold all 100 of those, leaving 0. Again, you don't have to put this line. I just wanted to reuse the formulas. And I sold 490, so I need 490 more to make up the 590. So I sold 490 of the 600, leaving 110. So I add up my total cost of goods sold is the 14,250. My ending inventory is sitting right now at 2,750. So I have an entry. It'll be accounts receivable sales for 22,420. And then also on the 20th, I'll have debit cost of goods sold credit inventory for 14,250. Then the next date, so I've eliminated all my sales. The next date is the 28th. So on the 28th, I purchased 400 at 30. So I have none of the $20 ones. Again, you can skip doing that line. Once I exhaust it, I put it in for the Excel. So I have my 110 at 25. And then I have an additional 400 at 30. So I add those up. So my ending inventory is 14,750. Right there. My cost of goods sold is simply my 6,000 plus 14,250 to a total 22,250. Remember, cost of goods sold is on the income statement. The income statement is a summary for the period, for the year ended, so I take all of the cost of goods sold for the year, 6,000 plus 14,250. But inventory is on the balance sheet. The balance sheet's just the balance on a specific date, so I only want the ending inventory. Inventory is either sold throughout the year or still here. So the amount sold throughout the year is 20,250, and this one is 14,750. I want you to think about perpetual versus periodic. The first in is always the first in. So if I go back, remember these numbers, 14,750, 2250. If I go back to my periodic tab, it's the same number. It's only going to be the same under FIFO because the first ones in are always going to be the first ones in. However, under LIFO, that's a different story. So I'm going to go down here under LIFO. So I start with 400 at 20, so I'm right at this line. Okay, and my next date is I sold 300. So on the 12th, the only thing that existed was on the 10th, the only thing that existed was a $20 layer. So I sold 300 of the 400, leaving 100 left at 20. So that's what I have there. Okay, my inventory layer is now the 100 at 20, and I purchased an additional 600 at 25, so now I have 2 layers. Okay, and here's where your order of your layers becomes pretty important. The next date I sold 590, so again I want to total up to 590, so I usually put that, and then I work from the bottom up. So I sold 590, I don't even exhaust this layer, so I sold all $25 ones, so I sold 590 at 25, so 590, 600 minus 590 leaves 10 of the $25 ones, and I have all 100 of the 20. So now I have 2 layers, which I bring down here. And I have a 3rd layer because I purchased another 400 at 30. So now I have 3 layers. And my check figure again is 35,000. So I add up my ending inventory and cost of goods sold. They should always equal what I have available right there. Okay. So I have ending inventory is 14,250. Cost of goods sold is how much I've had during the period. So 6,000 plus 14,750 is 20,750. So I have a total of 35,000. So that's my check figure. Notice that I have cost of goods sold of 20,250 under FIFO and 20,750 under LIFO. Weighted average, while it's very easy under periodic, can give some people some fits under perpetual because you simply have to figure out a new weighted average every time you purchase something. Okay, so hopefully you remember these numbers, but I had 400 at $20, so since I only have 1 layer, the average is still 20, so I have the same under FIFO, LIFO, and average costing because I only had 1 layer. So I have 400, I sold 300, I have 100 left. Okay? Then I purchased one. So what I bring my 100 at 20 down. Notice I'm always redoing all my inventory just to keep a running total. Some people try to take shortcuts. Just be good at it before you take a shortcut. And I purchased up here, hopefully you printed this out, 600 at 25. So whenever I have a purchase, I need to figure out a new average cost. So I add my 600 at 25. So I have a total cost of 17,000 divided by a total number of units of 700. So 17,000 divided by 700 is 24.29. I no longer have $20 and 25 unit dollar. I'm sorry. I no longer have $20 and $25 units. I only have 24.29. Okay? So I have 700 units that cost 24.29. for a total of $17,000. So my next date, I sold 590. I sold 590 at 24.29. I had 700. 700 minus 590. I get 110 left at 24.29. So I debit cost of goods sold, credit inventory for 14 So notice I have an entry on the every sale date for accounts receivable sales and cost of goods sold inventory. Okay, so then my next one is I purchased an additional 400 at 30. So I have 110 at 24.29. Okay, so 110 at 24.29 coming right over from here. And I purchased an additional 400 at 30. Every time I make a purchase, I have to compute a new average cost. I have 14,671. I think I ditched my decimal points. Rounding is not necessarily incredibly important here. So 14,671 divided by 510 is 28.77. So I have, if I sold some next one, if some more, I would sell them at an average cost of 28.77. Okay, so my total ending inventory is 14,671. My total cost of goods sold is 20,329, and so I have total of 35,000. So for my check figure, this one you may be a little bit off, but again, note that the one with the in periods of inflation, which I have here, it's going up. The one with the lowest net income is the one with the highest amount of costs. The one with the highest amount of costs is the 20,750 compared to the 20,250 compared to the 20,329. So right here is my highest number, and that is LIFO. LIFO always has sold the most expensive products, the bottom ones. So it will have the most costs and therefore the lowest net income.